Hey, this is John Starks. You be down here on the street and you watching Taking Stock.
2 minutes to go here into the closing bell on this Friday, July 10th. At this hour, the S&P 500 expected to finish in positive territory, 0.4%. Join us now to kick off the broadcast as we are down here live on the trading floor of the big board for his take on today's tape and a lot more. The great Jay Woods. Thank you, Jay.
Hey, good to be here. Good to finish out an up week in strong fashion. It was a little shaky to begin the week, but it looks like we're finishing strong. Energy and technology led this week. Very odd to see both of them finish strong, but that's the kind of market we're in. We're never knowing what we're going to get from day to day.
Yeah, especially considering this was a light week on earnings, light week on economic data, but investors still finding things to trade to. But that turns our attention to next week, because whether or not we're ready, earnings palooza, front and center. We kick off with the financials. What else is on your radar?
Yeah, big banks and regional banks. We have JP Morgan and all the big banks reporting. They've been doing well this year. JP Morgan actually hasn't been. Goldman, Citi, and Morgan Stanley. Then we have the regional banks outperforming the big banks, believe it or not. But the regionals want to see that strength continue. This is good for the overall economy. Then we have some interesting ones in healthcare. J&J, UNH, and then Netflix. Netflix, as a technician, on the ropes. Let's see what happens. The stock has been beaten down. We need to get a good quarter and good price action out of Netflix. So lots for us to watch next week.
We got the team from Vegas shares with the ticker symbol VAIE here at the NYSE. Set to do the close. The great Jay Woods. Thank you for being here to kick us off, my friend. Nice to see you.
You got it. All right. Have a good weekend.
Enjoy your weekend. Time now for the close. And there you have it, closing out a winning week here on Wall Street for the S&P 500. Look at this crowd going wild here on this Friday, July 10th. The S&P 500 in positive territory, 0.4%. The Dow in positive territory as well. Similar story there for the New York Stock Exchange Composite Index, but the Russell 2000, the small caps, down 0.5%. Materials, consumer staples, telecom, the strongest sectors in the S&P. Most sectors in the S&P in positive territory, except for healthcare. Over to the Dow we go. Nike, the big outperformer. Don't say that often. We'll do a bit of a closer look into Nike's trading day and week coming up in just a bit, along with NVIDIA and Honeywell, the Dow leaders, the Dow laggards, IBM, UNH, and Merck. Catching a bid on the day, the home builders plus industrials. Few other sectors taking a hit, however. Airlines having a tough day today, and airlines having a tough few days, as well as quantum stocks. Let's bring in the man himself, the institution inside the institution, the great Peter Tuchman, the Einstein of Wall Street, a man of many titles, and why not? Thank you for being here.
I really appreciate it. I love it. Nothing better than the Friday afternoon close out a week.
The vibes here are always amazing on a Friday.
You know what? I've been coming here for 41 years. I rarely ever miss a day just because it's just the energy in this room is spectacular. Good days and bad days. There aren't really any bad days, because if you look back at it, every pullback, consolidation, sell-off, even crash, has been a better buying opportunity, and everyone really needs to know that. It's a little bit of a tidbit in the nooks and crannies of a market, but that is a fact.
It is time in the markets, not timing the markets, as we like to say. So speaking about energy, I mean, we're still waiting to see how the final volume looks.
Right.
I mean, we're under $1 billion right now, but our kind of year-to-date average is between 1.2 to 1.4.
I know, which has been really nice because we were hanging around the 800, 900 for a while, and so we've sort of gotten to a really nice threshold. 1.2, 1.3 are good days. That's good volume.
Overall, was this a surprise? I mean, obviously we came off a losing week, but Jay Woods and I were just talking. We saw energy outperform. We saw technology outperform. That tells us the kind of generals at the front of the pack kind of getting back into that leadership position, helping us to pull back closer to our previous all-time highs.
So I think what it does is it culminates a week of rotation in the marketplace. And some days in rotation are not positive days in indexes. Some of them are negative days. Right, because as you sell your outperformers and you buy some, small cap, mid cap value, sometimes it's not necessarily. And you also have to realize that in an index, there could be one or two stocks they can really sort of skew the direction, right? A UNH or a Pfizer or a Triple M or an IBM and a Dow can skew everything, as well as in the S&P. So people need to look more into, as I always say, we look at advanced versus declines, we look at actual rotation, directionality of the market. I think the last 2 days, we've gotten back the enthusiasm. We've got people who are sort of been patient buyers, waiting for the market to come to them. We've had 2 days in a row now, after a bit of a sputter, where the market has opened down, had a little bit of a sort of a jolt early morning, and then to spend the rest of the day trending. And trend days are, the trend is your friend, old Wall Street adage.
There we go.
And when you have a day where you're going up in one direction, hopefully an up direction, and you pull back to moving averages, right? That builds foundation, that builds strengths. Those are constructive days. Right, for day traders, those are what we call the trend traders, sometimes the best, the most profitable days, because you stay in the trade until the trend breaks. And if you look at the market, look at that graph, right? The market pulled back many times during the day, but it never broke the trend. If you look at the trend line on an exponential moving average, it never broke it. And that's when you see people hop into the market, because that gives confidence.
Yeah,
and that's a great way to end the week.
It certainly is. Talk of technicals are always welcome here on the show. We have to leave it there, but next week, please join us again, because we got several inflation prints. We got the big banks reporting quarterly results.
We have earnings,
we got
and we have
Netflix.
some economic data
got a lot of
that I
stuff
think
going
is
on.
important. We managed to get through these 2 weeks of sort of in the corridor weeks without anything, not a lot of damage, a lot of constructive action.
Especially on the back of renewed geopolitical concerns, we still shook them off for the market.
We did, and we did re-engage that breaking news thing, and then the oil up, market down engagement, and we got through those days.
Yeah, we certainly
So
did. Take
we
good
took
care.
the pebble out of our shoe and we're on the up.
I love you, bud. Enjoy
Have
your
a great
weekend. Take good
weekend,
care. We'll see
everybody.
you again soon.
Nixon 5.
Nixon 5. Oh, we're going to say that for the next year straight. Here are the updated Polymarket odds for World Cup. More than $4 billion in total trade volume on Polymarket for World Cup winner contract. As we speak, we got Spain and Belgium. They are squaring off, so of course these numbers will soon change. France still the favorite, 39% odds to win it all on July 19th. Argentina currently at 18% after that wild comeback against Egypt earlier this week. Spain at 16%. England, maybe it's coming home. They sit at 15%. Norway at 6%. Belgium and Switzerland both at 2% odds to win the World Cup. We, of course, have Norway, England tomorrow at 5 o'clock, the match I am most looking forward to for the weekend. Argentina, Switzerland tomorrow night at 9 p.m. Eastern. Jeff, we'll take a look at a couple stocks that call the New York Stock Exchange their home. And how about shares of Nike, heavily beleaguered year to date, but getting a nice pop on the day, up about 3.7%. Back above the 50-day moving average, still down 30% for the year, towards the very bottom of the Dow year to date, along with Salesforce. The average 12-month forecast calls for 11% upside off of these levels, but it has had a rough road to get here. And how about Circle? Up almost 5% flat, getting regulatory approval to establish Circle National Trust earlier today. That's a new national trust bank. The decision set to place the company's digital asset custody operations under direct federal oversight. Shares up almost 5% on the day, but still in the red, 17% year to date. Yesterday, FinTech TV's Lucy Gosmararian sat down with Ahmed Benzurak of Adnoc Distribution. They talked all about their proposed acquisition of Shell South Africa and much more. Take a look.
Welcome to the ADX. Today I have Athman Benzaroug, Chief Strategy, Transformation and Sustainability Officer at Adnoc Distribution. Welcome, Athman. Thank you very much for joining us today.
Thank you for having me, Lucy.
So let's start with the big picture. Why is this proposed acquisition significant for Adnoc Distribution?
Well, indeed, it's a big day today because this proposed acquisition of Shell downstream South Africa comes along with the strategy that we have communicated to the market, which is growing internationally in an accretive. It's perfectly well with the target that we have provided the market to be a company that will be international mobility player.
So South Africa is a very different market to the UAE, both politically, commercially, regulatory-wise. Why does it make sense as your next move?
It makes a lot of sense, and the reason being that South Africa mirrors the UAE from a regulatory point of view, where the fuel prices and the fuel prices and the margins actually are regulated with a strong regulatory framework that protects the retailer from inflation and currency risks. So like the UAE, there is a strong visibility on the margins per liter are.
Stream South Africa a compelling platform for growth rather than just an available asset?
First of all, a trusted asset. We are talking about downstream South big years by number of stations. We are talking about a trusted brand with 100 years. So it's a high quality asset with an extensive network, also in non-fuel retail, presence in commercial, in lubricants. And therefore, this is the great platform for ADNOC Distribution to create higher value in the market for long term.
So investors hear a lot of company outgrowth.
Yeah.
How do you demonstrate that this is disciplined growth?
So for us, it's all about disciplined growth. And what does it mean, disciplined growth? It means disciplined growth and execution. And this is where we have been consistently delivering over the years since we are listed on the ADX where we are today. And it means that any action actually bring a scale at the earnings and dividend levels, dividend accretion, but also significant free cash flow yield. And this transaction brings us a fee per yield and a hurdle rate which is above the communicated return that we have provided to the market.
Fantastic. That's very impressive. So where would you say this fits into ADNOC Distribution's longer term ambitions? And is this a one-off?
That is bigger. And like the UAE leadership, we are looking always to expand and make sure that the UAE brings actually the best of its knowledge to be the best in the countries. And this is what we have been doing consistently with Saudi Arabia, with Egypt, and was to create today, to have a platform to develop again ADNOC Distribution to become a global mobility. And what that the volumes in long term significant government in or driving age population. So clear features are really attractive, and this is where we're going to bring the ADNOC Distribution DNA with the support of the management on the ground to bring better customer experience to the South African drivers and the partners.
Fantastic. And for the international community, are there any key messages you would share with them about ADNOC Distribution?
The key messages are simple. What we are announcing today is in line with our strategy. It's a disciplined approach. It is based on strong track record and execution of already markets where we have been creating tremendous value, which is the UAE, which is K, and which is Egypt. And for instance, what they should expect is that this transaction will provide more value to them and also strengthen our vision to increase our dividends at some point. This asset also, and this is the last message, has a lot of upside where we have identified $30 to $40 million incremental EBITDA by year 5 post completion, and we are confident to get the regulatory approvals next year on this amazing transaction.
It definitely is amazing.
Thank
Asman,
you.
thank you so much for joining us at DX today.
It
Back
was
to
a
you.
pleasure. Thank you very much.
Welcome back to this Friday afternoon edition of Taking Stock, live from the trading floor of the New York Stock Exchange. Our next guest is this guy here to my right, to Mr. Chris Perkins, head of Franklin Crypto. Really nice to welcome you to the show. Thank you for being here.
Thank you, JD. Awesome to be on.
I want your sense on some of the biggest, most important factors driving crypto pricing right now. We know the storyline of how far we have fallen off those October 9th, October 10th highs. trying to find footing around 64,000. What do you see is going on here?
It's a really interesting time for the crypto space. And why is that? It's because sentiment is really bad. But fundamentals continue to improve. And what you're seeing right now is a regime change. Retail has been in the space since day one. They ebb, they flow, they go off and chase the shiny new toy we call AI. But the difference now is that institutions are moving forward aggressively and furiously. I was in London last week. I went to the Goldman Sachs conference, and I went to a Robinhood event. And everyone told me that the amount of onboarding they're seeing is unparalleled, despite it being a bear market. So again, very constructive investment climate when sentiment is bad, but fundamentals are improving.
Can you still be bullish on that onboarding process, a lot of these underlying technologies, in a way that is disassociated from the pricing pressures of Bitcoin itself? Or at some point, do you expect Bitcoin pricing to get caught up with the enthusiasm in the other parts of the Bitcoin ecosystem?
I feel very constructive because institutional investors are very sophisticated, and they're refocusing on what matters, and what matters are fundamentals. And so when you think of crypto for a second, all it is a wrapper. It's a wrapper that unlocks 24/7 markets that are instantaneously accessible globally. And so it really, what doesn't matter what the wrapper is, it's what's underneath, right? So as you look at the various altcoins, they have different cash flows, different products. By the way, all this stuff is being normalized from a regulatory perspective. I expect to see action next week in DC on the Clarity Act. Whether or not it passes doesn't matter. We're getting regulatory clarity one way or the other. We got Chairman Selig, Atkins, these guys are helping us with transparency and predictability. It is a very favorable climate for institutions.
Oh, so that's interesting on the Clarity Act, that even if it doesn't pass, and that might get even that much more following the midterm elections, with so many people who watch these races saying, well, at the very least, Democrats may flip the House, and even if you have bipartisan support, it just makes passing legislation that much more difficult.
I think you're a little bit off by saying Democrats are not supportive of crypto, because we're seeing a number of them that are, guys like Senator Gallego. And so I would love to see a floor vote, because we'll see who's who and where's where. We're going into midterms, and to my knowledge, American people are generally pro-crypto, so let's see where it comes out. I feel generally bullish, maybe 51%, could be a coin toss.
Okay.
But again, either way, doesn't matter, because we're getting clarity from our regulators.
Yeah, of course.
Either way.
And it's certainly much more of a bipartisan issue than a lot of others, there's no doubt. I got about 30 seconds left. What is Franklin Crypto for anyone a bit unfamiliar?
Yeah, so I recently joined Franklin Crypto. I'm the head of Franklin Crypto. I couldn't be more excited. From Jenny Johnson, Sandy Call on down, the CEO Jenny Johnson, she's doubling down on her commitment to this asset class. And around the world, all of our clients, they now have risk for not being in this ecosystem. In the past, it used to be the opposite, where if you're in crypto, you had risk. Now it's the complete opposite. So we're here to give them scalable investment solutions and to solve their investment needs. I couldn't be more excited.
Chris Perkins, the head of Franklin Crypto. Thanks a lot for taking the time to break this down with us on this Friday. All the best for the weekend. Come back anytime.
Thank you, sir.
Don't go anywhere. A lot more Taking Stock coming up live from the big board right after this. Welcome back. Time now for a few headlines in the world of business of sports on this World Cup Friday. First up, Jalen Brunson's Game 1 NBA Finals jersey selling for more than $1 million at Sotheby's, setting a new record for Knicks memorabilia after leading the New York Knicks to its first NBA championship in more than 50 years. What? The Knicks won the championship? Is the first I'm hearing of this. Next up, bidding for the U.S. media rights to the 2030 FIFA World Cup could begin at $1 billion, more than double what Fox paid for the current tournament that has certainly seen record high viewership. Finally, Kawhi Leonard's trade from the Clippers to the Raptors on hold as the league investigates allegations that the Clippers circumvented salary cap rules through the former jersey sponsor aspiration. Pablo Torre's been all over that one. The New York Stock Exchange's own Ashley Mastronardi sat down with Kevin King of LexisNexis. They discussed how to navigate changing rules in the world of student loans. Take a look.
The Department of Education says roughly 9 million Americans were in default on their student loans as of June, and the weight of those balances on their finance was drawn further into focus July 1st when the government's loan program underwent significant changes. Joining me now is Kevin King. He's the Vice President of Credit Risk at LexisNexis Risk Solutions. Kevin, welcome.
Morning, Ashley. Great to be with you.
So catch us up. What federal student loan changes went into effect on July 1st?
Well, a number of changes that I think everybody needs to be aware of. We'll start with existing federal student loan holders. There are about 7 million consumers that have a saved federal student loan. That was a Biden era plan. It got put into deferment in 2024. It was officially shut down on July 1st. And what that means is, look, sometime in the next couple of weeks, those consumers are going to get a 90-day notice saying select another plan. Those plans will almost certainly have higher rates that they're going to have to figure out how to manage. And for the first time in 2 years, they're going to need to start making payments, which, as you mentioned at the top here, is a challenge that many Americans are struggling to address.
Can you dive into a little bit more what that means for the millions of Americans paying off their student loans?
Certainly. So again, for those 7 million, and I would say of current student loan holders, they're the ones that are really impacted here. It means something very significant, right? They have not had to pay anything for the last 2 years. They need to restart that habit. Likely around October 1st, the first bills are going to come. And if they haven't opted into one of the new plans voluntarily, they're going to get placed in one that will have significantly higher monthly payments. We also know very likely in January of 2027, the government's going to be restarting involuntary collections. And they're going to go out and starting to garnish wages, withhold tax refunds, things that have major impacts on consumers' financial stability. So knowing if you're one of these 7 million who are going to be placed in a new plan and preparing for it financially, going to be really critical to avoid the debt trap that has impacted so many consumers.
How can credit scores be impacted by delinquent student loan holders?
So they can be impacted severely. And while I would say involuntary collections have been paused, and we're kind of looking at some kind of post-midterms timetable for those to restart, the impact on the credit scores of not making your student loan payments, that's real and that's now. Right. So we have a lot of consumers. You mentioned 9 million already in default. Millions more are not making payments. And that's before we add this new 7 million tranche of consumers into the mix who are going to feel pretty quick impacts if, starting on that around October 1st deadline, they don't start to resume making their scheduled payments. So we've seen impacts as steep as 75 to 100 points. It's going to vary depending on a consumer's credit score and situation, but they're not trivial and they can severely restrain consumers' ability to access affordable credit going forward.
And how is LexisNexis helping borrowers navigate these new rules?
Yeah, it's a phenomenal question, Ashley. A lot of viewers may not be aware, but LexisNexis Risk Solutions operates one of the largest consumer credit reporting agencies in the United States today. And a lot of what we do is support large U.S. lenders and telecommunications providers identify consumers who might be underestimated through traditional credit reports and scores alone, providing additional insights so they get that full picture of consumer credit health. Now, we're heading into an environment, as we just said, where not only are delinquencies on the rise outside of student loans, we're at 30-year highs in auto, maybe 15, 20-year highs in credit card. We have more challenges like these student loan developments hitting consumers. That tends to cause most lenders to tighten up, right? Get more conservative on lending policies. We want to provide the insight so they can continue to lend with confidence, continue to put affordable credit in the hands of consumers without worrying about scaling losses. So that'll be our focus. How do we support the lenders not getting overly conservative in these times?
Welcome back to the show. And now Money 2020's very own Scarlett Sieber is back to explain all of the ways that fintech companies actually make their money. Take a look.
Welcome back. I'm Scarlett Sieber with Money 2020. And on this segment of how fintech companies actually make money, we're going to be talking about Griffin, a company selling a bank without selling to consumers. Okay, let's break that down. Griffin is a UK-regulated bank offering banking as a service to fintechs and platforms. So how does Griffin actually make money? First, account and platform fees. Second, compliance as a product. This is becoming a big thing here, people. Licensing, safeguarding, reporting. Third, stickiness through regulation. I never thought I'd be saying that, but it's true. Once a product relies on a bank's balance sheet, switching is not an easy thing to do. So why now? As regulators tighten expectations for fintechs, demand has shifted from fast partners to licensed infrastructure that won't disappear mid-cycle. We've seen a lot happening recently to get us to this point. So Griffin doesn't chase users, it sells certainty. And that is how Griffin actually makes money, by turning regulation into a service, not a hurdle. If there's a fintech you want unpacked without the hype, drop it in the comments. It might just make that cut. In the meantime, back over to you.
Next week here on Wall Street, the kickoff to a fresh new earnings season. The big banks set to report on Tuesday. That includes Citi, Goldman, JP Morgan, B of A, as well as Wells Fargo. Later on in the week, we'll hear from names like Johnson & Johnson, UNH, and streaming giant Netflix. Thank you for watching today's edition of Taking Stock. Have yourselves a terrific weekend, one and all. We'll see you again live on Monday.